Today's webinar, it's on the topic of price action. So price action, let me just close this. Right, price action is what I consider the most important aspect of trading itself. You see, a lot of my students, when they come to me, they will always ask me one question. They will always ask me, so Ezekiel, if I want to start trading, or another question will be, what would be the number one thing that I should learn in order for me to be successful in trading? So that is always someone or another. That is always the question that I get all the time. So the question that I get is, so Ezekiel, can you tell me the number one thing to be successful in trading? Of course, I always shoot them back. So what do you think constitute to becoming a successful trader? So I will always have answers like coming back like, we should have discipline, we should have a good psychology, we should be able to control our emotions, we need to have a good trading system, or anything else. And we should need to have a good strategy, we need to have a good mentor, and that is my favorite. That is my favorite answer. Yes, you need to have a good mentor. That's the reason why you got Asia Forex mentor in the house. Right. So that being said, my answer is very simple. I always throw back a question to the public whereby there are so many Forex trading strategies available on the internet itself, and so many free Forex trading strategies available on the internet itself. So then the question will be, if there are so many free strategies available on the internet itself, why is it that when a trader applies the strategy that they have learned off the internet, could be from a YouTube video, for example, or from any article itself, right? Why is it that the trader who applies the strategy that he have just learned from that person, let's say from the YouTube video, and somehow or another, it did not work as well as it did than the guy who recorded the video? So the guy who recorded the video apparently is a master or did great in that strategy that he has taught, that he has reviewed, right? But somehow or another, when you apply the strategy that you learned from watching his video onto a live trade itself, some way or another, you do not know what turned wrong, but the trade didn't end up being profitable. So then the question will be, where did it go wrong? Is it because the strategy didn't work? Is it because the guy was lying? Or what? What is the exact reason that, hey, the guy who used that strategy worked, right? But somehow or another used that strategy and it didn't work. So what is the reason? Well, my answer would be that the guy who taught that strategy is good at a strategy by all means, right? Everybody who reviews a strategy somehow or another, in a way, they have mastered the strategy that they have reviewed. That's the reason why they're sharing it out. But it doesn't mean that you can apply that strategy or that pattern or that setup every single time you see a pattern. For example, if you see a double top. Okay, let me just show you an example of a double top. If you see a double top that goes like this, one high, two high, one top, two top. So this is a double top. So it doesn't mean that every single time you see a double top, it will work. Because sometimes, well, so for example, the guy is sharing a strategy on double top, and then you see, wow, so it means that maybe I should sell here, and then when it sells here, then it will definitely go down, and I'll make a big profit. So the next time you see a high, the first high, when it goes up, it makes a second high. So then what you do? You decide to take a sell here. But guess what? Instead of it going down, the market went its way upwards, right? And then you're thinking, oh shit, well, the guy who thought that the double top strategy was crap. It was just bullshit, right? So is that the case? Well, apparently not. You see, the question is, then is what I always tell my students itself. You cannot apply every single strategy that you have learned into any set of charts, which means that you cannot apply any strategy over, let's say a double top or any strategy that you have learned into any set of charts. It just doesn't work that way. Number one, my most important key is, before you learn about strategies, before you even learn about any single strategy out there, you must learn how to read the chart. You must learn how to read the market, because the strategy cannot be applied in every single market itself. The market will change. So which means that you should not be learning about strategies or just applying strategies every single time you see that there is a setup. Instead, you should read the market, see where the market is going, see where the price is going, and then apply the correct strategy towards it. For example, if right now the market is in a consolidation, then you should be playing a consolidation method on a breakout trade, for example. Or if the market is trending up, then you should be trading a trend continuation setup, for example. Or if the market looks to be that has a potential of reversing, then you should play a reversal strategy, for example. You see, you got to play the right strategy according to the market. You cannot just simply apply any single strategy every single point there is a setup itself. If you apply a double top setup every single time you see a potential double top, I bet you will go bankrupt in no time, because it just doesn't work that way. And that is also the exact reason why there are so many forex traders out there that complain that, hey, forex trading is a scam. Hey, forex trading doesn't work. No, the fact is that you need to learn how to read the market first before you decide whether or not should you apply a double top or a double bottom strategy, right? So number one key I always tell my students is that you need to be a master at chart reading, or I would say you need to be at least proficient to understand how to read the chart. Then should you know which strategy to apply at that single point in time. So in order to read the chart, it comes down to one thing only. And you probably have guessed it. The answer is price action. You see, price action originates from where? Price action originates from the exact source of every single bar itself. Price action originates from the source of every single bar itself. And people may say, hey Ezekiel, how about indicators, right? How about all these lines, all these moving average, all these RSI, MACD, or whatever, stochastic, right? How about that? So my question or my answer would be that all the moving averages, all the RSI, all the MACD, they all generate from the main source, which is what? Which is all these single bars itself, which is the exact price itself. So in a way, as you can see, price, the answer, or I would say the setup from an indicator will probably lack in comparison to the actual price itself. For example, the market is heading up. So the MACD or the RSI could be that is going up. And then you see that, wow, it's going up. So it means that there's good momentum. So you probably should buy now, and then you buy. The moment when you buy, the market decides that, hey, it has reached its peak already, the market then starts to tumble down. And then when the market starts tumbling down, then guess what you do? You decided to sell. And then when you sell, the market goes back up again. So then you will think that, hey, the market is playing a trick on you. I believe every one of us, in a way or another, will have such a feeling before when we trade. So no, the market is not against us. It's just how the market works. Right? The market is never against any single one of us. It's just how the market works. So therefore, before we even apply all these moving averages, all the MACD or whatever, we need to learn how to read every single bar itself, which is price action. So today I want to review probably the most important price action bar itself. You see, it can be a bar chart. It can also be a candlestick. It doesn't matter. They are all the same to me. For my preference, right, I choose bar charts is because that this is just my trading preference. But if you prefer candlestick, by all means, use candlestick. It doesn't make any much of a difference, right? It's just a preference. So price action is the reading of every single bar. So today I'm about to review the most important bar of all, which is what I call a pin bar. So this is a pin bar. A pin bar is where the opening, this is the opening price, and the closing of the bar is at the top quarter. Is at the top quarter of the entire bar itself. So this is the bottom quarter, this is the 3/4, this is the top quarter. So the opening and closing needs to be at the top quarter of the entire bar itself. And this will be a buying pin. All right, this will be a buying pin. So for example, for a sell pin, then it will be just the opposite, whereby the opening and the closing is at the bottom quarter itself. So this opening and closing is at the bottom quarter itself with this long tail at the top. This is a selling pin. All right, so this is for selling. So for example, when you see something like this, potentially the market is going down. Right? When you see something like this, potentially the market is going up. You see, as easy as it may sound, this is looking at price action as at the simplest form. Price action is where we read all the single bars itself and then we combine them to an understanding of how the market works. So whenever we see a bar, especially with a bar with a nice long tail like this, right? A bar with a nice long tail like this with opening and closing at the bottom quarter, this shows us that this is a selling pin. And when we see something like that, let me go a new chart. When we see something like that, for example, let's say we got a selling pin here. And let's say prior to that, the market is going up. Okay, the market is going up. The market is going up, 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 up. And then right at the highest point, it formed a nice long selling pin. So guess what? Where would the market go? So when something like this happens, there is a good chance. I'm not saying all the time. Of course, that's where we will slowly increase our probability of trading. I'm saying that there is a very good chance, right, that the market will probably start turning down. Down how long, we do not know, because if the overall trend is still up, it may probably retrace a short while before going back up again, right? But a single pin bar has the potential to turn down a previous uptrend into a downtrend. Right? What happens after that? It could be another buying pin bar that appears here. Then the market may change from this point onwards, because this is a buying pin, right? Because opening and closing bar is at the top, this is a long tail. Because of that, the market may then change its way back up again. Okay, so let me show you some examples of a pin bar itself. So this is the go chart. This is the weekly time frame. So for example, let's say let's start from here. Okay, let's start from here. Okay, we go. Okay, let's just start from bottom here. The market goes down and then it forms here. This is the first part. A pin bar, opening, closing at top quarter, long tail, bouncing off my lines here, which I'll cover soon, right? This is a rejection area that supports it. And from here onwards, the market starts heading up itself. And then along way, we see another pin bar over here, right? Opening and closing at the bottom, at the top, sorry. Long tail at the bottom. This is a buying pin. So the color of the pin doesn't matter. It can be red, it can be green. As long as the opening and closing lines is at the top quarter, it is a buying pin. So then it went further upwards itself. So as the market heads up, up, then we saw something over here. Right? Long bar, opening and closing somewhat. Okay, I would prefer the opening at the bottom, but this is something that we can still accept. This is a selling pin. The market heads down. So then along the way, we see another small pin bar itself over here. It's like a confirmation. It's like a trend continuation. Right? It's like a trend continuation. And then the market continues its way up. Then along the way, another dip over here. Yep. Then the market continues its way up. There's another confirmation over here. The market continues its way up. Then as it goes up, it came down, and then here, it protrudes out again here. There is another pin bar over here. It came up, it came down. From here, this pin bar, the market went back up again. Then after that, it came back down again. Of course, we will do some chart reading along the way here to see why it came down. One of the easy reasons that I can see is because it's getting rejected by my blue dotted line here, which is a rejection area. That's the reason why it came down. Right? As it came down, it formed another somewhat like a pin over here. And of course, I'll prefer this closing to be at the top, but nevertheless, it went up. So then it came down again. And then here again, it formed another buying pin itself. Two, in fact, before going back up again. So apparently, as you can see, in one chart itself, in one small chart itself, I can simply just look at pin bars alone and be able to trade the market just by a simple trading method. This is just trading with pin bars itself. It's as simple as that. I'm not even looking at a proper chart analysis or whatsoever. I'm just using pin bar alone. By just using pin bar alone, I will be, in a way, increase my probability of trading to be above 50% as a whole. To be above 50% as a whole. So then, of course, then we do the fine tuning here and there. That's where we will make trading even much profitable as we increase our probability of trading. So as you can see, price action alone with just a single bar that you have just learned, right? Or in a way I've just shared with you, with just a single pin bar itself, it will make a difference in your trading itself. So the next time when you trade, if you see a buying pin, and if you decide to sell, please think twice, right? Please think twice. I'm not telling you to straight away buy when you see a buying pin, but if you decided to sell and then before that you have a buying pin, please think twice. At least this reason alone should make you think twice about selling, because you know that a pin bar is actually a very powerful indicator. All right, it's actually a very powerful set of price action. In fact, it's the most powerful price action bars that is out there itself. All right. So happy trading this week. Try looking for pin bars this week, and I will talk to you on the next webinar itself.